Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COHU INC quarterly report. COHU Inc. provides a wide range of businesses and services to the semiconductor industry. The company's offerings include semiconductor test equipment and services, test and inspection metrology, automation systems, microelectromechanical system test, modules, data analytics software, automated test equipment for wafer level and device package testing, various test handlers, including pick-and-place and thermal subsystems, interface products, such as test contactors and probe head spares and kits parts, and labor warranties on test and handling systems, training services on system maintenance and operation application, and data management software consulting services on its products' artificial intelligence process control and analytics-based monitoring software. These services are marketed through a direct sales force and independent sales representatives. The decline in COHU Inc.'s stock price over the past year can be attributed to a combination of factors. Despite reporting net sales exceeding analyst estimates in several quarters, the company's GAAP loss per share was often greater than anticipated. This discrepancy may have contributed to investor skepticism and negatively impacted the stock price. Additionally, the company's financial performance was influenced by its focus on growth in AI data center markets, which, while promising, has not yet translated into significant revenue increases. The acquisition of Tignes, Inc. and the completion of a convertible senior notes offering were intended to bolster COHU's balance sheet and provide strategic flexibility, but may have also raised concerns among investors. Analyst sentiment was mixed, with some maintaining buy ratings while others had hold or sell ratings, suggesting that investors are uncertain about the company's future prospects. Overall, these factors collectively contributed to a decline in COHU Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be attributed to a few key factors. On the growth side, increased demand for mobile and AI-based computing applications has been a significant contributor. Additionally, the acquisition of Tignes on January 7, 2025, has also driven revenue growth. However, there are several factors that have led to revenue decline. A decrease in gross margin due to the mix of systems sold has had a negative impact. Furthermore, an increase in R&D expense due to higher material costs and incremental costs from Tignes has also contributed to the decline. Moreover, a decrease in interest income due to lower cash and investment balances, as well as the repayment of the term loan credit facility and acquisition of Tignes, have all played a role in reducing revenue. The company's debt level has undergone significant fluctuations. Initially, total indebtedness increased from $0 to $17.3 million. However, under the credit agreement, outstanding borrowings decreased from $350 million to $1.6 million. Additionally, a revolving credit facility of $8.9 million became outstanding, while lines of credit decreased from $120 million to $0.8 million. In contrast, interest expenses have remained relatively stable. Interest expense was unchanged at $0.1 million in 2024 and 2025. However, there was a minor decrease of $0.1 million, 20%, from 2024 to 2025. Overall, the company's debt level has experienced notable changes, while its interest expenses have remained relatively consistent. Management is optimistic about the company's outlook, citing offsetting pressures in various segments through demand for mobile and AI-based computing applications. They are investing in research and development to drive growth, with a focus on expanding capabilities through strategic acquisitions like Tignes. The company is also repositioning its global organization to optimize costs and maximize operating cash flow. Despite macroeconomic uncertainty, management expects continued capital expenditures to support business growth and anticipates sufficient liquidity to meet operating requirements for the next 12 months. The company's financial summary reveals that they have engaged in a share buyback program, utilizing $8.6 million of cash for this purpose. This indicates that instead of distributing dividends to shareholders, the company has chosen to repurchase shares from the market. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary highlights concerns regarding inventory buildup or supply chain disruption. The main reasons for these concerns are the valuation reserves on inventory due to lower demand and market conditions, excess and obsolete inventory charges, and restructuring programs aimed at optimizing cost structure. Inventory charges have been increasing, with $0.9 million in 3Q 2025 and $0.8 million in 3Q 2024. Excess and obsolete inventory reserve requirements are also a concern, with charges totaling $4.1 million in 2025 compared to $2.8 million in 2024. The company has taken steps to address these concerns by decreasing inventory levels by $3.6 million during the first 9 months of fiscal 2025. This decrease reflects a strategic adjustment in purchasing and production levels in response to current business conditions, including lower demand in certain end markets. Overall, the financial summary suggests that the company is actively working to mitigate the risks associated with inventory buildup or supply chain disruption. That concludes the financial summary for COHU INC. Feel free to comment below, and I will be happy to answer them when possible.